Welcome to the IRS Solution Attorney Show. If you have problems with the IRS, don't focus on the negative, focus on the solutions. With the IRS Solution Attorney, Darrin T. Mish. For over 15 years, he's been helping taxpayers with IRS problems reclaim their lives and their financial stability. Now, here's your host of the IRS Solution Attorney Show, Darrin T. Mish.
Good morning, and welcome to the IRS Solution Attorney Show. I am the IRS Solution Attorney, Darrin T. Mish.
And I'm your co-host, Katrina Madewell. Thanks for joining us today. We're glad you're here.
How you doing, Katrina?
Doing great.
Is it a beautiful day in the neighborhood or not?
Always is. I think we just say that when we, do this show in a different studio.
And no matter what, it's always a beautiful day down here in St. Petersburg, Florida.
It's a little hike from where we live, but it works out.
Yeah, it's not all like that. As a crow flies, it's not far at all. The problem is you got to go on roads with traffic and bridges and
people that don't know how to drive. So you guys stay safe out there because all the snowbirds are here.
Yeah, no offense to our northern friends who come down here in the winter and clog up the roads. After Easter, we're kind of happy you're gone. No offense. But
we love you guys, but buy a house here and pay taxes, will you?
Yeah, or just buy a lot of stuff while you're here during the winter and pay a lot of sales tax. That's good, too. So that works for us.
So what's today's show about, Darrin, since I do not have an outline?
Today, we're going to talk about common errors when preparing your tax return. We're in tax season right now, and most tax preparer types, CPAs and accountants and whatnot are pulling their hair out because it's starting to get busy. And I thought we'd do a show today just about talking about, how not to screw up your tax return.
It's pretty right on time. There's a whole bunch of people that use those automated systems, and it amazes me. I talked to a couple that I've known for a long time the other day. I'm like, hey, who's your CPA? Who's your tax preparer? And she's like, me.
TurboTax. That's our tax preparer.
Me.
Yeah.
Yeah, doing it online.
Or like our guest the other day was 1040.com, right?
Exactly.
They had the free, software that you can use to prepare your tax return. Yeah, that can work. If your stuff is really, really simple, I'm okay with you preparing your own return.
If it's not, don't.
Yeah, I have, I have doctors' wives who do the tax return for the doctor practice and medical practice, and not a good idea.
I don't think so either.
Absolutely
not unless that's her background, right? And there's
yeah, she has experience, and that's fine. I'm not talking about that, but I'm saying if you're just if taxes are not your thing, and you haven't gone to school for it and got a lot of education about it, then you probably shouldn't be doing your own tax return. But if you're going to do your own tax return, we're going to talk about things today.
So these common tax snafus, do they mostly apply to the self-employed?
Well, no, not necessarily. There's a big long list. We have about 20 different items today, and so we'll go down all those things in great detail. It's not going to be one of the more fun shows we do. We're not going to talk about, like we did the other day, roosters and cruises and passports and things like that. This is a much more technical show where we talk about how to do things right and how to not do things wrong.
So we got some good tips for you. Stick around. We'll have a bunch of really good information as you prepare to move toward filing those tax returns.
Because if you make mistakes, bad things can happen to you. You can have, late payment penalties. You can have negligence penalties, which are like 25%. You could, if things go really badly, you can be...
Wait, what's a negligence penalty?
Negligence penalty is when... you're audited, and because of your negligence, there was a significant mistake on the tax return, and the negligence penalty is 25%.
But what's an example of that?
Well, okay, let's say that you were audited and you had really high car and truck expenses, and then you can't prove those, which is very, very, very common. After those are disallowed, and they will be if you don't have a contemporaneous mileage log and whatnot, then you're going to be hit with the negligence penalty on that addition to tax. So let's say you owed $4,000 in additional tax, well, you're going to get hit with a negligence penalty of 25%, so another $1,000, and then interest back to the due date of the return, April 15th of whatever year, on top of both the tax and the penalty. So,
what about the self-employed? They get multiple 1099s and one's missing. Is that an example?
That's also an example because,
they figure they should have known.
Yeah, it's all attributable to you. Another penalty that can happen if you make a significant mistake is civil fraud. Now, civil fraud is really bad. Civil fraud is where the IRS has decided that they're not going to pursue a criminal fraud case against you, but they're going to assert and allege civil fraud, meaning they're not going to put you in jail, but they're going to whack you really hard. So the civil fraud penalty is 75%. And it's usually used in bigger cases, at least in my experience. So the taxpayer might owe $100,000 in additional tax. And then think about it. Civil fraud penalty of $75,000.
I know the show is technical, and for you run through this stuff, but I think we should give an example of each thing as we're going through them. So what's an example of that?
So civil fraud, I had a couple come in a couple weeks ago, and they owned a really large repair shop. I won't even talk about what kind of repair, but the mechanical kind of repairs. And they grew really fast, and they had really sloppy bookkeeping. And so they didn't report all their income. And when I talk about they didn't report all their income, I mean, they left millions of dollars off as unreported income. I mean, your best option at that point, other than, hey, this is civil fraud, is, no, we were like way, way negligent. I mean, that's your second best option, right?
So
I mean,
pay that 25% penalty we talked about and move on.
25% is a great deal as compared to 75%. And then once you're hit with a civil fraud penalty, my understanding of the law is that civil fraud penalty cannot be discharged in bankruptcy ever either. And so, if you have a negligence penalty and eventually the timing is right for a bankruptcy and everything else, you can go ahead and discharge the negligence penalty and late filing and late payment and all those other penalties, but not civil fraud. So it's pretty bad. Could also be subject to, obviously, to additional interest if you make a mistake, because if you owe more tax, you're going to owe more interest.
Everything is like adding taxes, interest, and penalty, isn't it? It's not just the taxes; it's all the extra stuff.
And theoretically, you could be charged with tax evasion. I think this is fairly unlikely for most people. Although in the example I gave you before, where it was millions of dollars of unreported income, it could end up being a criminal case, because you're talking about real money, and it's just not a fact pattern that looks real good. So
was that 1 year or several years? Just curious.
I think it's usually a couple of years. I don't remember off the top of my head, and I don't want to get them in any more trouble.
No, just curious though.
But yeah, it was a while. And what happened is they started the business, and then it just unexpectedly really took off. And this is common in businesses where you
hire a bookkeeper.
The same system that you use to keep track of your bookkeeping when you're making $50,000 a year is different than the system you need when you're making $250,000 a year, which is different from 500, which is different from $1 million, which is different from multi-millions.
Yes.
So they went from zero to multi-millions in like a year or something. And so
there's a lot of steps along the way.
To me, just as my, not only my experience as being a tax problem resolution lawyer, but also as a business owner, it's not surprising to me that they had significant problems preparing that tax return. They should have gotten help, and they didn't. Those
so
were
they didn't have a
self-prepared.
CPA that filed it? No?
No. It was just like, the family member prepared the return using the best available information, which was not very good. And so there were significant errors.
Well, like you said, there's a bunch of, there's extra income, but there's also a bunch of expenses.
Yeah, for sure.
And so you have to have a bookkeeper. Like if they're making millions doing whatever they're doing, then they should be doing what they're doing and leaving the bookkeeping up to someone else.
Boy, that's a really good point, right? And I think I said that to them. It's like, look, you don't need to be doing the $17 an hour or even $27 an hour or even $50 an hour bookkeeping work. And, you don't need to have your face stuck in QuickBooks. That's not your place. But you do need to have somebody who's doing that.
And that loops right back around to what you said, that your process is different if you make $10,000, $25,000, $250,000, $500,000 and up. Like your process and the people you hire will change.
If you've got $100,000 gross running through your business, you really don't have that much money to spend. Now, I know that might sound a little bit elitist or pompous or something like that. I don't mean it that way. I just mean when you have $100,000 gross, it's just not that many transactions, unless you have a lot of $1 transactions or something. It's just not that much. That's kind of the kind of business that maybe the owner can do the bookkeeping. It's going to be painful because it's just not fun stuff to do, and there's people that would do it for hardly anything. But I want to share this too, because we don't talk about bookkeeping very often on the show. I just recently discovered that the big banks like Chase and Wells Fargo and Bank of America and whatnot have a built-in interface with QuickBooks Online. QuickBooks Online is it's cheap. It's like $20 a month or something.
Yes.
Literally, QuickBooks Online can interface with your bank account and suck those transactions straight into QuickBooks Online. Well, then you just need a bookkeeper type person to just kind of look at those transactions, make sure that they're coded correctly.
Correct.
So that, they know that every time you go to Sam's Club, that's office supplies, for example. And make sure
they'll ask, my bookkeeper asked, she's like, what's this? And,
if it's one-off weird stuff, then they certainly should ask. But then if there's if you go to Sam's Club, once a month and every time it's off supplies, they're going to know, okay, well, that's where he buys his paper, for example.
And do your transactions separate. That's what I do.
Absolutely.
Like if I go to Sam's and I'm buying something, if I get audited, whatever, I'm going to have 2 transactions, same day, same time.
Absolutely.
One's going to be for my personal account and one's going to be for my business account.
That's a really good point, and that's the exact example I give a lot, which is, okay, so you go to Sam's Club and you've got, copy paper, pens, highlighters, and then strawberries, milk, and bread. Okay, that doesn't go on one order, okay? What we want you to do is we want you to go up and separate those things into the business pile and the personal pile. Pay for the business pile with the business debit card. Pay for the personal stuff with the either cash or personal debit card, whatever, doesn't even matter. But keep them separate. And don't try to write off the strawberries, milk, and bread. Because when I'm handling your audit and I show them the receipt from Sam's Club and there's strawberries, milk, and bread on there, maybe it's $10. That's not the point. The point is it's a pattern of sort of, sloppiness at best.
Yes.
Dishonesty at worst. But sloppiness for sure. And if they start to see that pattern, they're going to look for that pattern throughout every expense on your tax return.
And on that note, we're going to take a really quick break because it's about that time. We'll be back in just a minute.
Are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darrin Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darrin Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves. So get Mish. 888-438-6474. Principal Office, Tampa.
Welcome back to the IRS Solution Attorney Show. I am the IRS Solution Attorney, Darrin Mish.
And I'm your co-host, Katrina Madewell.
Today's show is all about common errors when preparing your tax return. What to do, what not to do. Since we're in tax season now, and we want to make sure that you can minimize the number of errors that you have in your tax return so that you don't have problems, which could result in significant penalties and interest. One of the things that I want to say, and this is really important because I see this happen all the time, before you file your return, even if you're using a professional preparer, you have to make sure it's complete and correct. You have got to review the entire return. You really need to understand the entire return, which is really not that complicated when you boil it right down. And if you don't understand it, ask the preparer.
Okay, so when you say review it, understand it, like I don't look at my stuff. I'm like,
you've got to look at your
I
return.
give my bookkeeper all the stuff. I answer all their questions. The tax guy asks me questions. They file it. I sign it, and that's it. If
you don't have just a fundamental understanding of how the money flows through a tax return, then I would venture to guess that there's significant mistakes on the tax return every single year. I mean, I do look at it, but I don't study it. Like you're saying, like I should know where everything goes. That's what I'm hearing from it. Well, let me give you an example. So you're probably a corporation, and so on your corporate return, you should be looking at the gross income. Hey, does that look about right? Yes. That's about what I thought it would be. So that would be one thing to check. I'm always surprised by that number. Yeah, well, sometimes, yeah. Okay. Could be higher or lower. Yeah. So I want you to look at gross income in your case. And then I want you to go and look down the expense categories, including the supplement under there, and just roughly eyeball all those. Like if there's a notation on there for, I don't know, I'm trying to think of something bizarre, seminars, and it's $29,000. That might be correct, or it might be way, way wrong. It might be they need to split them up, right, into some other better subcategories. Yeah, like look at your categories too, so that it doesn't look really funny. Like maybe in that instance I just gave you, 29,000 should have been 2,900, and that that would be a more reasonable number. I don't know, because you might have really high continuing education. I know you travel a lot and stuff that, and that's fine. But a lot of that travel, in fact, most of that travel shouldn't be under seminars. It should be under travel, because there's a line for travel. Seminars would be just whatever the event cost was, and maybe in some industries the cost of an event is $195. In some industries it's $19,000. It just depends on your industry and what you're doing and whatnot.
And there's seminars, also continuing education, so you could divide that up. So I imagine what you're saying is pay attention to those details so that if you can subcategorize stuff better or make sure there's not an extra zero added or an extra zero left off.
Well, I just looked at a tax return yesterday. The guy's under audit, and he's basically in a service business, okay? And he had a big number for cost of goods sold on two different tax returns. Cost of goods sold is what does it cost you to buy the good that you later sell for a profit. So I'm like looking at the return. I'm like, okay, so what's up with this? What good did you sell? And he's looking at me like, I have no idea. So then we kind of dove into it deeper, and it was like photocopies that he gives the clients and software subscriptions. Well, that doesn't go under cost of goods sold. I mean, this is just a really good, timely example. It just and they know based on the what's called the SIC code, the industry code that you put on the tax return. They know that he's in a consulting basic kind of business that he doesn't have any cost of goods sold. So it's a red flag. They know
what matches with your industry and what doesn't.
That single line may have been what got him audited.
Wow.
So I want you to just take a look at the return and make sure that it kind of makes sense, because it's not uncommon. I look at lots of people's tax returns, and I look at returns, and I'm like, that just doesn't make any sense. And if you fix that, then you wouldn't be in the mess that you're in right now. So let's talk about some common errors here so that we can provide some value to people who are listening, especially on the podcast. If you submit your tax return electronically, it's supposed to be greater, more accurate, because it eliminates the person who has to open the envelope and then key in the data. So e-filing is almost mandatory anymore. So really you should e-file unless there's some really big exception. And I'll give you an example of an exception. Sometimes
you owe IRS debt and you can't e-file?
Well, it's not that. It's that, if you have really old tax returns, you can't e-file. Like if you have to file a 2012, you can't e-file that because it's too old. But another example would be, let's say you have one really big expense that's unusual even for your industry, but you have all the documentation to prove it.
I'm a real estate agent. Give me a weird expense.
Well, let's just use that last example, the $29,000 in seminars.
Okay.
What we would do in that case, we would go ahead and attach, we'd paper file, and we'd attach all those receipts with a cover letter that said, hey, we thought you might be interested in knowing that this number, is really high, but here's all the documentation.
So we know it's weird, but we're attaching this so you don't flag it.
Yeah, and so it will actually serve the purpose of avoiding that audit on that issue in advance.
Do you think it would draw more attention because it's attached, or no? You think it's going to do the opposite?
Well, what I think happens is a human being has to look at that return, and then it gets, somebody eyeballs it, and they're like, yeah, that looks good, and they just go ahead and process it, and you should avoid the audit on that particular issue. Otherwise, you're going to want to e-file because it's more accurate. Because e-file or the paper filing, sometimes it's rare given how many paper returns are filed, but you could have an input error, like where the person just literally input the social security number wrong on one of your kids or something like that, and then that's going to pop out a letter, it's computer generated, and then it's going to just cause headaches for you as a taxpayer, because they're going to generate the letter, and then if you don't deal with the letter correctly, which most people don't know how to do, then the IRS is going to write back and say, okay, now you owe us $2,000 because we're disallowed the kid.
So you have to amend your return, basically, if you had let's say 2 flip numbers on a social?
No, you don't have to amend your return. What happens is the IRS will issue a letter called a CP 2000, and there'll be instructions. It'll say, here's what we think is the problem, and here's, if you agree, just sign here and you owe us more money. Or if you disagree, here's what you need to do, and here's a deadline, and things like that. And people most of our society anymore just doesn't communicate well in writing.
Well, they don't look at mail. I mean, think about it. Everything is so automated. I mean, sometimes I don't look at mail for a long time because I'm traveling, I'm moving, I'm working, everything's auto-debited. So it's not like if I don't open the mail, they're going to shut off my electric bill because everything's automatically paid and debited. I don't look at that.
Yeah, you're a little younger than I am, and I'm still really kind of tied to mail because
do you write checks?
I do write some checks. I don't write a lot of checks, but I probably write 10 business checks a month and 5 personal checks a month.
I mean, I write business checks, but I just don't write a lot of personal checks. And the only thing I really write checks for personally is like lunch money.
I'll tell you,
because I don't want to pay that $5 fee that they charge to do it online. So I choose to write a check.
I'll tell you on the business side, most of the statements still come in the mail for sure. So anyway, you're going to want to go ahead and e-file your return if humanly possible, because it's going to be processed faster, and you're going to have fewer delays and whatnot. Also, make sure that you check with your tax preparer that they have an electronic acknowledgement that the return was received by the IRS, because I've seen this mistake many times where the tax preparer thinks that the return was e-filed, but it wasn't actually acknowledged by the government, and so it never did get filed. So that does happen from time to time. So you want to make sure that if it's e-filed, that the guy does have the electronic acknowledgement. I just won this particular issue in an audit where I had a gentleman who's in construction, and he has a construction crew, right? He has 4 or 5 guys that are with him at all times working on houses and whatnot. And every day they go to McDonald's, like literally every day. I had a stack of McDonald's receipts. And typically that would be like a weird red flag. Like, that's kind of strange. But the explanation was, no, he takes them to McDonald's because he can tightly control how long they're gone and how long it takes, and so they can get back to work.
That's a great argument.
And that was fine. That flew. So. But
that makes sense. Think about it.
It makes sense to me, and it's not like they're going out to, Outback every day or something that is really expensive. I mean, it's McDonald's. I forget how much it costs to feed 5 guys. It's like $10 or $15 or something ridiculous.
It's worth the time of not having labor costs in the field.
And if those guys all took their own pickup trucks and they're, they go to God knows where, like, who knows how long they're going to be gone, or if they even come back. So they all pile in one truck and they go to McDonald's pretty much every day.
And on that note, we're going to take a really quick break because it's about that time. We'll be back in just a minute.
Welcome back to the IRS Solution Attorney Show. I am the IRS Solution for Darrin T. Mish.
And I'm your co-host, Katrina Madewell. Having a good time today talking all about tax things you should pay attention to make sure you get it right.
Yeah, today we're talking about common errors that you can avoid when preparing your tax return. So far, we've only hit really one, and that was to make sure that you file your tax return if humanly possible. There's lots of good reasons to do that. It does tend to be more accurate, and it does tend to speed up your refund and or the processing of your tax return, period. The next thing that I wanted to mention is, did you clearly print your name, social security number, and current address, including your zip code, directly on the return?
Now, I know print?
Well, it either has to be printed, with a computer or handwritten. I do see handwritten returns still, but it's got to be clear. It's got to be clear. You've got to spell your name right. It's just obvious stuff. But because of the business I'm in, I see all kinds of crazy stuff where, especially with kids, the kids' social security numbers are wrong or transposed or whatever. I actually had a case. I'll tell you this story real quickly. I had a case where the husband and wife were divorced, and the husband was a non-filer for many years, but was entitled to claim the 3 kids for that entire time, since they were divorced. And he didn't know what the kids' social security numbers were. The kids refused to tell him, and the mother refused to tell him. So it was really, he's like looking to me, well, what are we going to do? Well, finally, I came up with an idea.
You can apply for it?
We did the 4506T for a return that we knew was filed, had the kids' socials on it, and then that's how we got the social security numbers.
Makes sense to me.
So the next one would be, did you choose only one correct filing status? So sometimes people choose more than one filing status. They might click, they might check head of household and single. Well, that's wrong. So you don't want to do that.
And so they can accidentally pick 2?
Yeah, sometimes the software won't let you do that. But if you're preparing returns by hand, sometimes people, make silly mistakes like that. The next one would be, did you check the appropriate exemption boxes for your personal, spousal, and dependency exemptions? Did you enter the total number of exemptions? So if you have a family of 4 exemptions, you want to make sure you put 4 in the right place. Otherwise, it's going to be really screwed up, and your tax return is going to have a problem with it, and you're going to have to amend it later or deal with the IRS one way or the other.
We have 20 things to go through. Did you
say
say 20?
We'll go fast. The next one is, did you enter the names and taxpayer ID numbers for everyone listed on your return? Like we talked about with the kids. You got to make sure that all those names and numbers are correct. And if you had a name change, for example, after people get married, typically in our society, right, the wife changes her name and then and whatnot. You got to make sure you go to the Social Security Department and change your name ahead of time of filing a return. Otherwise, wife's name should be maiden name. Otherwise, for example, if your maiden name was Smith and now it's Jones, your married name is Jones, then you're going to want to make sure that go ahead and make sure that with Social Security they have the correct name at that point. Did you enter your income on the correct lines? I see this all the time, where maybe the income goes on maybe you're self-employed and you do the Schedule C and you move the income over and you subtract all the expenses and whatnot. And I can't remember off the top of my head which line. I think it's line 12 that income should go on. But a lot of times people put it on like line 1 where wages go. Or if you got a W-2, they just put it on the wrong line. It's guaranteed to cause an audit of some sort. It's not necessarily going to be an office audit, but at the very least, it's going to be like a CP 2000 kind of deal which is a correspondence audit where the IRS is going to want to know, why'd you screw that up? It's just really messed up. So make sure that you do that correctly. And make sure when you review your return that you paid a tax preparer to prepare, make sure that the income is on the right lines. I know there's people listening right now who are like, well, that's why I paid that guy. But you've got to make sure that you do it correctly. Otherwise, because you're ultimately responsible. That's the thing that I'm trying to stress here is even though most of us in our society are somewhat ignorant about how to prepare a tax return, how to review a tax return, how to,
But you're thinking that's why you hire the expert.
It is why you hire the expert, but you also ultimately it's your rear on the line. It's your reputation. It's your money on the line. It's your responsibility. It's not delegatable. You cannot say, well, the return was wrong because the CPA messed it up. Therefore, I shouldn't have to pay penalties in interest. You can try that, but it will not work. It's not a delegatable, responsibility. So the next one would be, did you calculate deductions and credits correctly? Did you put those on the right lines? And then did you attach the necessary forms or schedules? So especially for tax credits, there's an education tax credit. There's a whole bunch of tax credits. If you're going to take the credits, then you have to attach the correct form in the worksheet that shows the computation of that credit. If you don't do that, you're going to get audited. It happens a lot with those education credits. So there's 2 or 3 different, different kinds of education credits, not special education credits, but
it sounds like we should have started the show with a list of questions you should ask your CPA before you ever hire them.
Yeah, well, especially with CPAs, I have a lot of respect for CPAs. They have an official state license accreditation. They have there's a fairly high minimal degree of competency, but just human beings make mistakes. I'm not going to say I've never made a mistake of any kind. I've make mistakes fairly regularly, but not necessarily on client matters. But cut people off in traffic by accident, things like that, and because humans just make mistakes. So these are just a short list of things that we want you to. If you're driving
and you're listening, that person might have accidentally cut you off. So don't have road rage.
We do have a tendency to think if somebody's driving badly that it's intentional, and I think it is most of the time, but not always. So. The next one would be, did you put brackets around negative amounts? So let me give you an example. You could have a loss from your Schedule C or your Schedule E. Schedule E is when you have typically either rental real estate or a corporation. And you have a loss, you have to put that loss in brackets on your tax return. Otherwise, it's going to add it instead of subtract it, and it's going to cause a problem with the tax return. Even if you leave the brackets off and you obviously have subtracted it because you can tell from the numbers as they go down the return, the computer's still going to have a choke on it, basically, and it's going to be a problem. So the next one would be, if you're taking the standard deduction, is this making sense to you so far?
Yep.
And checked any box indicating that you or your spouse are 65 or older or blind, did you calculate the correct standard deduction? Because those 2 things, 65 or older and or blind, gives you a higher standard deduction.
So only 2 things? Like there's no veterans or any other deductions in there?
No, those are pretty much the only 2 things. But we just want to make sure that if you're going to go with a standard deduction as opposed to itemizing, that you get what you have coming to you. Because that's an example where if you don't do that right, then your refund is going to be smaller or you're going to owe more tax. And the IRS is not going to fix that for you. They're not going to go, hey, we got good news.
We owe you some more money.
Yeah, that just doesn't seem to happen. So the next one would be, did you figure the tax correctly? If you're manually preparing returns with a pencil or whatever, did you use the tax table correctly? Did you follow the line across? Did you enter that tax correctly? If you didn't enter that tax correctly, I promise you, I guarantee you, you're going to get a CP 2000. The government's going to reach out to you and say, hey, you screwed that up, and we want you to fix that. This one I see absolutely all the time. Did you sign and date the return? I see it all
so simple.
The time. Now, if you're e-filing, there's a form. There's like an e-filing authorization form that the preparer is supposed to get you to sign. Okay.
Electronic signature.
They don't always do it, but they're supposed to have that form signed by you. If you're paper filing, you absolutely positively must sign and date the return. I do not believe that the IRS will accept what looks like a facsimile sort of signature. Like if it looks like a photocopied kind of signature or a computer generated signature, they're not going to take it. The best way to sign anything with the IRS is in blue ink, so that they can tell that it's an original. They will accept black ink. I think they'll accept red ink. I don't know. And don't even ask me about green or purple. I have no idea. I just go ahead and do it with blue. You can use black ink. If you use black ink, then it is subject sometimes to them saying or trying to assert that it's a photocopy and unacceptable. But typically, especially if it's like a ballpoint pen, they're going to take that because they can tell it's an actual signature.
But those gel pens, they're hard to tell.
Yeah. And then we've had wars with the IRS over the years where
that pen. Pen in black.
Yeah, I'm using one of these Pilot G2s. It's kind of like a rollerball ink kind of pen. And from time to time over the years, the IRS will state that either, a ballpoint pen doesn't look right, and then we'll start to use Sharpies, and then they're like, no, those don't look right. And then we start using rollerball pens like this, and then eventually they'll say, that doesn't look right. And then we go back to the ballpoint pen and we just start over. There seems to be a cycle, and it's probably just somebody at the unit that prepares or that processes powers of attorney that just gets bored and just decides to pick on you or whatever.
To change the pen this time of year.
Yeah, it's really, I'm not really sure what's going on there. One thing is, if you get a W-2, so you get wages and you have you're employed, did you attach the copy B of the W-2 to the tax return? Now, I personally don't think this is a really big deal, but it is something that's required and that you should do. Because if you don't do that, sometimes that could delay your refund.
It sounds so simple.
Yeah, it is simple, but it's something that we forget about because, well, you and I forget because we're not, we're self-employed, although we both get W-2s, I'm sure. The next one would be if you get a 1099-R, which is for retirement. There's going to be withholding on that typically, or possibly. And if there is withholding on that, you want to make sure that you attach that to the tax return too. Otherwise, if you claim the withholding from it and you don't attach the 1099-R, they're going to have a problem with it, and they're going to ask you about it. And I think why they want these attached is because the W-2s and 1099s now are both due at the end of January. Now, let's say you file your return on February 4th. Okay, well, the IRS doesn't even have the W-2 and 1099 in the computer yet. And so if you said the paper copies, then they'll be able to process that, more expeditiously than if they have to wait for the W-2s and 1099s to be processed by Social Security and get put into the big computer and all that stuff. If you're a non-filer, so it's been many years, you're not going to have the copies of these documents, and that's fine because by then the IRS will already have processed those 1099s and W-2s into the computer, and it should all work out just fine.
So it doesn't really matter at that point.
At that point, it doesn't matter. The next one would be did you attach all your necessary schedules and forms in the order of the sequence number shown in the upper right-hand corner? So basically, what I'm saying here is the schedules have to be all there, obviously, and they all are supposed to be in a particular order. So,
and if they're not, it freaks them out.
And I'll tell you what I see a lot is I'll see a self-employed person who's supposed to be filing a Schedule C, and the numbers will all be on the 1040 part of the form, but the Schedule C will just be missing, just gone. Like somebody either lost it or didn't send it into the IRS or whatever, and that's guaranteed audit. Guaranteed you're going to get audited because they're going to be like, hey, what's up with this? Why is the Schedule C missing? So it just can't be missing.
Well, you're listening to the IRS Solution Attorney Show. We have to take a quick break. We'll be back to finish up that list.
Welcome back to the IRS Solution Attorney Show. I am the IRS Solution Attorney, Darrin Mish.
And I'm your co-host sidekick, hanging out, talking about some of these tax things that is a little bit over my scope of knowledge here. But I'm having fun anyway.
As we're doing the show, Katrina and I have been doing the show together for about a year and a half, and I'm looking at her right now, and her eyes are glazed over. She's looking kind of glassy-eyed. And anyway, it's just an important show for some people.
You can tell by how much Pat jumps in or doesn't.
Yeah, for sure. Pat's like in a coma over there. But anyway, we're almost done with the list here. The next one would be, did you mail the tax return to the right address? We think this is very simple, right?
With all due respect, there's a bunch of different addresses that the IRS has, so this could be a simple one that anybody could mess up.
Yeah, so you got to make sure that if you're going to paper file, that you mail the return to the right address. Now, the next one is almost as obvious. Did you put enough postage on the tax return? Now, most people's tax returns are going to be, multiple pages, stamp. Right? So it's going to be more than one stamp. So you got to make sure it got sent. My little tidbit would be, if I was going to mail in a return, 100% of the time, I'm going to send that thing certified mail. And if you're going to send it certified mail, you really need to go stand in line at the post office anyway. So you might as well just let them calculate what the right postage is. Make sure you keep the little green receipt and all that kind of thing. If you have it,
but you can ask them to postmark it and take a picture.
You can do, yeah, I guess you could do that.
I would do that.
The next one would be, if you owe tax, did you enclose, a check or money order made payable to the United States Treasury, not the IRS, the United States Treasury. And then in the memo line, we've talked about this before. You're supposed to have your Social Security number.
Why can't it say the IRS? It can't say the IRS.
It should not say. It should not say the IRS. And the reason is that over the years, people have figured out that IRS is very easy to turn into Mrs. And then it can be Mrs. Whoever, and then it's easier to forge the check. So don't write the check out to the IRS. Make it out to the United States Treasury, and that should avoid that problem. I believe that they will cash the check if it's made out to the IRS, but if it's intercepted or lost or whatever, in the meantime, it's much easier to forge a check made out to the IRS than to the United States Treasury. So if you owe tax, did you put the check in there? Did you properly notate on the memo line your Social Security number, the Form 1040, what year, all those things? If not, there's a pretty good chance that payment is going to be misdirected and it's going to end up in the wrong place. I've had this happen to me twice in the last 6 months.
So what do they do with it if it just gets in the wrong place? Like it just floats around the IRS indefinitely?
Seriously. I just had a case where we sent a big check, like $45,000, and we put it on. I'm
surprised I don't want that wired.
And they take personal checks all day long. But anyway, they put it on 2008, which already had a credit balance, and then they left it there, and then they didn't notate the credit balance. So I had to get involved and raise all kinds of heck. And they eventually, quote, found the money. And now we're in the process of getting that money moved and fixed. But that's what happens is sometimes the money goes there, they cash the check, you can prove they cashed the check, and it just gets lost. The next one would be if you're due a refund and you request a direct deposit, did you double check your routing and account numbers? Okay, this is really important.
What happens if it goes to the wrong place? Like if it accidentally goes to Pat George's bank account?
I honestly do not know what happens if the routing and account numbers are wrong. My guess is
somebody else got it.
You lose. That's my guess, is that you're just out of luck. So make sure that that's correct. I don't know if I would want to put direct deposit on for my refund or not. I've never done it. I think I like the satisfaction of getting the check back, but my refunds is usually like $13 or something, so it's really not that big a deal. The next one is this is kind of important. This is the last one on this long list. Did you get a copy of the signed return and all of the schedules for your records? How often, even in your business, how often do you ask somebody for a mortgage, they need a copy of their last 2 years' tax returns, and they don't have a copy?
Oh, we gotta get it from their accountant. Sometimes we gotta order the tax transcript.
Yeah, I would say your average person.
Never signed. They're never signed.
Never. I would say more often than not, more than 50% of the people do not have a copy of their tax return.
You know what we see too, and I don't know how they could not have a copy, which is weird because I always have a copy. But they might have an initial one they filed, and they made a little tweak. And then they actually filed one that was just slightly different. Not a big deal. Maybe they added an expense or some income. They got a small 1099 or whatever. Well, so they gave us the first set of tax returns. Well, what happens is, since we're in a high fraud state, all of our tax returns are subject to, audit, and they pull a 4506T and verify that what you gave your mortgage person is the same as what you gave the IRS. And if those numbers are off, they freak out like you're trying to commit fraud. It's bad. It could be like $10 difference, and they would freak.
Yeah, absolutely. So make sure you have a copy of the signed last, filed return. I think it's really important. And in today's day and age of cloud storage and how cheap it is, how cheap storage is, you really should just have access to that so that you can pull it up anytime you want. I did a mortgage recently, and I must have got asked for tax returns like 7 times. And each time I was like, yeah, whatever, here you go. It took me 3 minutes to give them a copy of the tax return.
Well, it's about that time.
This is the show called the IRS Brain Wreck of the Week. This is the segment of the show where we talk about somebody who came in with a significant tax problem, and after we got involved, they ended up smelling like a rose. In this particular case, it was kind of an interesting case. The husband owed about $257,000 in tax debt, and he and his wife were living in Florida. Now, he actually had to move to a state out west for work. And so we decided to file an offer in compromise, and we basically claimed the expenses for both households, the one in Florida and the one out west. And the reason we did that was because, in my opinion, that second household and all those attendant expenses were necessary for the production of income, right? Because he had this pretty good job out west, And if he wasn't living there, he couldn't work there. It wasn't an online kind of job. It was a place where it was a kind of job where he has to go someplace and do things. Okay. And so when we did that, the numbers worked out really good. We offered some very low amount of money, and because we had all these extra expenses, and they was completely legit. Well, what happened is, in the middle of my offer and compromise, couple decides, we're just moving out west. So they sell their house, which actually was owned by the wife, so it wasn't a problem. Sell the house, and they both move out west. Well, where's the problem? Well, the problem is now we don't have two sets of household expenses. We have one set of household expenses. And so their offer did go up tremendously. We ended up settling for $49,817, which is still a really good deal on $257,000. I mean, we saved them over $200,000.
What would that number might have looked like?
It might have been under $5,000. But this train wreck really illustrates that you should keep your lawyer in the loop.
Yes.
You know, you should not be, and this goes for pretty much any legal problem.
Any profession as well.
Yeah, you should keep them in the loop because they retained me and hired me for my expertise. If they had asked that simple question, hey, what happens if we move? You know, if wife leaves Florida and moves to Colorado, what happens then? I would have told them, well, I'm not going to say don't do it, but your offer is likely to increase significantly.
This goes for mortgage. It goes for real estate. It goes for everything. If you're hiring a pro to help you, a true pro, you shouldn't make a move. You shouldn't sneeze without asking them.
So in this particular case, the wife is not real happy with the outcome in this case. But $50,000 or $49,817 on $257,794.58 is still a very good deal. So I had to explain that to her. She's not she's not over the moon, thrilled about it, but it's still a good deal. And I really do think that it's the best thing for them to do.
She could have asked you if selling the house would have impacted the offer.
She very well could have. But I'm really happy for both of them. It is going to get this monkey off their back, and they are going to be able to move forward with their life.
And that's what you do. You can get Darrin at 888-GET-MISH.
888-438-6474. GetIRSHelp.com.
That's all the help we got this week. We're out.